Hello everyone, how are you? First we will cover the section A, and from next videos onwards I will post section B questions again in the same format how we are in a short clips of around 30 minutes. Okay, so that one concept is covered totally, and if you go through that concept in detail you will understand and you can work out different questions in a different whether it is section A or section B. A small request at the beginning is just you'll once it's done, see the complete video. That's very important. Then only we can understand till the end. Then only you can understand the entire concept. Is it? You should not at one go take your time, sit down, and at one go we go through the entire video as such. It makes a lot of difference. Once it's done, you like it, you share it, and you subscribe this channel. Once you start subscribing this channel, every time I post a video, I will post video on F7 financial reporting, F8 audit and insurance, and SBR strategic business reporting. Is it? As of now, I'm going for this exams, I'm going to cover these three topics simultaneously, one by one. Okay, and coming to the point, we are going to cover this. This question is related to audit evidence as such. Fine. First go through the things. The most important thing is what is the role we are playing, is right? What is the role it has been assigned to us? Here they said that you are an audit manager. Then you have to think from the audit manager perspective only. In the firm of WSD, an audit firm, you are planning the audit of a client's company which operates high street retail business. Okay, retail business of how many shops? 15 different shops. Is that? See, the rule says that you have to understand the entity first. That is with the where we are talking about the control environment. Is that? You have to understand the entity first. In what is the environment where we are going to assign what we are going to do and how the entity will work. Once you start understanding the entity as an audit manager or an audit senior, we can have a clear-cut perspective of understanding the task assigned to us. Is it? That's the first step. Now, every question you will find this as such. Is it right? A brief introduction about the entity. What they are saying, all the shops are owned by TERS and have always been included in financial statement at cost less depreciation. Fine. That is the accounting policy as per IAS 16. Okay, we should be very clear about the accounting policy standards. We have to be about auditing standards, accounting standards, reporting standards. All three has to go side by side. I'm covering the entire concept as such, is it? And you can apply these concepts in anywhere, wherever we are doing. We are talking in terms of what? We are talking in terms of financial statements, cost less depreciation, tangible assets. We can say it is a tangible assets, or you can put it in another way. It is a non-current assets. Is it right? The shops are depreciated over 50 years. However, you know from your discussion with management, the company intends to include one of the shops, the flagship store, at a revalued amount rather than cost at current accounting period. Is that? See, the rule says that if you are revaluing Is it right? If we are revaluing any non-current asset, the any current asset, is it right? Any asset, especially non-current. Here we are talking about the non-current assets. We should not revalue only one, exclusively one asset. That policy is your value. If you are revaluation, you have to do the evaluation for all the assets at the uniform level. Is it right? We should not be very selective. Is it? We should not be very selective only to one type of asset. This is one of the most important and significant point with respect to revaluation. Is it? They will test you on this. The revalued amount is expected to be material above the carrying value of the shop. Is it? They are only exclusively revaluing the flagship store. Is it? Other stores they are included. It's not going to be like that. Is it? There will be definitely inconsistency will be there. The valuation is based on the management estimate. Is that I'm giving you a complete, the moment I'm explaining you the scenario, your questions, you can answer questions on your own. You don't need my assistance at all. Okay? Means the valuation is based on the management estimates. Is it? Fine. Management has explained that the reason for revaluation because the flagship store is located in the area where the property prices are being much more quickly compared to others. See, property prices will go in the same way, trajectory, in the same trajectory, but see the thing, fine, we can agree with that. In prime location, the value will increase. Is it? Not in prime locations, in remote locations, the value will not increase that much. But the rule says that the value of land always appreciate, whether it is in the prime location or it is in the remote location. Is it? That's where the point. If you understand this, the things will be where they considered the flagship store to be significantly undervalued on the statement of financial position. What they are thinking about, this is the management estimate. Okay, management thinks that the flagship store has been undervalued. Now, if we are doing this, it means you are increasing the value of one store, is it? One asset, and you are ignoring other assets. They may be different. As an audit manager, you have to have a professional skepticism, is it? Professional. That's the most important. You have to think what's happening, what will go wrong, and how it is going to be affected. Is it? They say that only one flag. Why they are interested only one flagship, the one which is the flagship store? Is it that you should you will have doubt in your mind, yes, that why you have selected only one store, why you are not consider other 15 minus 1 and has 15 shops. Is it at 14 stores? Assuming that we have 15 shops, is it? Why we are not considering other 14 shops as such? Is it? This is the way. Very simple, very understanding. You understand. You solve these 5 questions. You can solve any related questions on this very easily. Management will not depreciate the revalued amount allocated to the flagship store building because they maintain that the building is to a high standard. See, what is the concept financial reporting? You should have a basic concept of financial reporting also. Whenever we are revaluing the asset, we have to depreciate. Is it right? We have to depreciate based on the current value. We cannot say that I will not depreciate on the revalued amount. No. When you are revaluing the asset, all the assets. Got my point? It is a blanket rule that we have to do uniform policy. consistency has to be there. Is right? Then only there will be a comparison. See, accounting concepts has to be very clear. Before that is the reason people why people are finding it difficult auditing. You should have the people will not have accounting concepts clear. Is it? You should have a consistency. Then only there will be a comparison. If there is no consistency, there will not be a comparison. This is the brief scenario they have given. Now, what are the questions? Is it right? In his notes for the audit planning meeting, one of the audit juniors made several statements in relation to the valuation of the stocks. What they are asking, which two, is it right? Which two of the below statements are correct? Is it right? Which two of the below statements are correct? Now, what is trust company, is it allowed under IAS 16 property to revalue the flagship while continuing the other three measure its three other shops at cost less depreciation. See what you have discussed in the we should revalue all the stocks. Is it I am writing here? Is it revaluation? Whenever we are doing a revaluation should be done across all the assets. Is it across all the assets uniformly? Is it across all the assets uniformly? That is what it says. Uniformly. You cannot do one shop and we have to ignore. What is the question they are asking? They are asking which two of the following below statements are correct. We have to be very clear. What's the question? What is the requirement? Whether it is in section A or section B, the requirement has to be, the clarity in the requirement gives you a 50% answer. Is it right? Means what we have discussed, we should not do it. Revalue only we are the flagship store, while other shops is going to be done at the cost edge. Again, this answer is outrightly no. The revaluation constitutes a change in accounting policy. So we will need to consider the adequacy of the disclosures made in respect of this. Whenever you are making a change in policy, because the policy is changing, accounting policy is changing. Whenever the accounting policy is changing, more importantly, we have to make a disclosure. Is it right? Disclosure in the notes to the accounts. Is it right? In terms of notes to the account. That is the one of the basic requirement. Is it right? One of the basic requirements. The revaluation. What they are saying? The revaluation constitutes a change in accounting policy. Fine. Yes, we are changing. We are revaluing the assets. It is the accounting policy changing. So we will need to consider the decrease. This is related. This is related. Now, the flagship store should be depreciated on its revalued amount. Just now I mentioned you now. Is it right? You have to, if you have any doubt, you go to the scenario where I am doing explanation. You listen again that. Okay? Whenever you are revaluation, the flag should be revalued, depreciation should be done on a revalued amount. We must confirm that all repairs and maintenance cost has been capitalized. We are not talking, is it? Never. We will never repairs and maintenance expense, maintenance cost. Is it right? Again, we have to be very clear. Repairs and maintenance is the operating expenses. Is it right? It is the operating expenses. This is nowhere related to the question as such. Is it right? This is nowhere related to the question. And why? See, then we have to go so many other things into consideration. Here we are talking about whether the revaluation is done. There is no point of having a discussion on repairs and maintenance. Is it right? Means this is not related. Understand the thing. understand the things with respect to all. You have to cover. This is that we are covering 4 different options. It means we are covering the major part of the concept. Is it right? Next. Okay. Indicate which of the following assertions. See, when you do the things, is it right? This is one of the area. You focus on the assertions. This is one of the area where we are covering a most important and significant topic which is going to be covered in the examination. State whether the following relevant to the audit of what? Tangible non-current assets. Is it right? We are talking about the existence. Is it? We are talking about the existence. When we say the existence, is it right? You have to make sure that the asset is existing or not. Is it right? That asset is in existence or not. You have as existence, you have occurrence, you have classification, and you have presentation. Is it right? Now, which are related to the non-current, tangible non-current assets, which are the assertions with related to non-current assets, as it right? Non-current assertions related. Existence, the asset has to be exist. It has to be exist physically, is it right? It has to be exist physically, and it has to be exist physically, and it has to be exist on the financial statements also. Is it? This is one of the assertions of non-current assets. Is it one of the assertions of non-current assets? Now, occurrence. Where occurrence happens when? Occurrence happens when we are talking in terms of the transactions. Is it that occurrence happens when you are buying, when you are selling, when you are, is it, when you are paying? Is it? Occurrence happens with respect to what? With respect to events. Is it that occurrence happens with respect to the events? Fine. Occurrence happens with respect to the events. Is it? This is one of the assertions which is not related to the non-current assets. Is it? Classification. When you are doing the classification, you are classifying the asset. Is it? You are classifying the asset. You are classifying the assets under either it is in the property, plant and equipment, either in the non-current assets or in the current assets. Is it? Your classification is done. Is it? In terms of the in which category it has to be done. This is one of the assertions related. This is one of the assertions related to the non-current asset. Next, the last one, presentation. Is it? Presentation in where? Presentation in the financial statements. That presentations in the financial statements as well. This is where we are talking in presentation, how you are going to present as per the International Accounting Standard 16, as per International Accounting 16, in terms of what? In terms of non-current asset. Now, there are other assertions also. Is it right? There are other assertions also related to what? Related to non-current assets. Yeah? What are the other assertions related to? You have a completeness. Is it right? You have the completeness. Is that I'm giving you in some, wherever it comes next time, I'm going to explain you this in detail. Is it? Your completeness, and you are talking in terms of what? In terms of accuracy. Is it? You are talking in terms, whenever you are talking, we have a valuation. Is it? Valuation should be done. And most importantly, we are talking in terms of allocation. Is it? These are the other different types of assertions. Is it? Other different assertions related to non-current assets. Means, see, by the way, is it? Means you should, how many assertions are there? You put the things. Is that first one, second one, third one? Is it right? Is it? This is the fourth one, this is the fifth one, and this is the sixth one. How many types of assertions are there for the tangible non-current assets? Existence, classification, presentation, completeness, valuation, and allocation. Okay. Now you can see that is the reason you cover one question, automatically you have to cover the maximum. We try to make sure that we are covering the entire concept as such. Is it? Next, what is the we are talking? Next one. Is it? Now, which of the following procedures will provide appropriate audit evidence? We have covered this. This is related to what? This is related to basically audit evidence in respect of completeness. In the previous case, we have written here, is it right? In the previous case, what we have done? We have written point number 4, is it right? Fourth assertion, completeness. Is that fourth assertion is completeness of the non-current assets. Now, which of the following procedures will provide appropriate audit evidence in respect to the completeness of the non-current asset as such? The completeness. Completeness means we have to show the physical and we have to show in the whenever we will buy a non-current asset, is that the first point of entry is the non-current asset register. The first point is right. The moment you will give the asset number, asset classification you will do, is right. You will the date of purchase, the non-current asset register. The first and foremost, this you understand this, you can make it. You should not go beyond this. Yeah, you should not. That's the way it will help. Means whenever we are having a physical inspection, the first physical inspection should be worked out with the non-current, any non-current asset. The non-current asset register is the primary source of information. What they say, appropriate audit evidence in terms of what? In terms of complete. For a sample of assets, is it selected? For the sample of assets selected with respect to what? Physical inspection. Agree that they are listed in where they have listed in non-current asset register. Fine. You have to agree with the Second one, for a sample of non-current assets listed on the non-current, you should not go see what is this. See the thing. For a sample of non-current assets listed, here there is no physical inspection. Is it right? We are going from back to front. Is it right? Non-current asset register. Is it? We are going from back to front. We should not see here what happening. We are going from the beginning, is it right, to the next stage. But here what happening? We are going from the back to the front. It is not related. We should not see when you are saying registered. Fine. First you should see whether physical asset exists. Then you have to see where it has been recorded. Is it? See, that is the reason it is for a sample of non-current asset listed in the non-current asset register, physically inspect. We should not go back. For a sample of assets on the asset register, recalculate. We are talking about the evidence. Is it right? We are talking about the evidence. We are not talking about the moment we say it's a recalculate, which is going to be there, it is related to what? It is related to accuracy. Is it right? The carrying about according to accounting policies. Okay? We are talking about the evidence. We are not talking about the accuracy as such. Now you see the thing. The moment you see, this is what it says. I am giving you every lecture, every session, I will have only one question. But one question will cover completely all the related aspects. Is that for a sample of assets on the asset register, I am telling you again and again, we should not go from back to front. Is that we should not go from the inspect relevant purchases. Is it the correct answer in this case is what? We have to have a physical inspection, agree that they are listed in the non-current register or not. Fine. It's very easy. Is that you have to make sure that how the things will work. At the planning meeting, it was decided that the audit experts should be sought in relation to the valuation of third properties. We need expert advice. Is it right? We need experts advice. Fine. That's if we need expert advice in terms of valuation of the property, because they are valuing only one flagship store. Is it? When you are valuing only one flagship store, prime location, definitely you should get you should get an advice from the expert. Is it reasonable? It is required on what basis? What are the assumptions? Is it we cannot go straight forward and do it. Is it? We need the advice of the expert, as the company has not used a independent value. Fine. Now, ISA 620, make it a point. I always tell to my students, this is the things which you should revise it. Don't revise it just before examination. Okay, it takes time for us. Is that to remember? Don't make sure that we are revising just before the examination. IAS 620 using the word, what is IAS says, International Standards of Accounting 620 says that when we are taking the using the work of the auditor's expert, then what they say, it makes it very clear. They say it is the nature, timing and extent of procedures, how much procedures we need to evaluate the works of the audit expert, depending on the when you are engaging the expert. Definitely we have to think about what is the nature, what is the timing, and what is the how much procedures we need to get convinced. Is it which of the following matters should the audit team not consider in determining the nature? Is that which should not consider? Now, when we are doing the things, what we have make it sure what is the scenario they have given. They get the scenario relating to what? Relating to the revaluation of the flagship store exclusively. Then definitely what are the preconditions? The risk of materials misstatement associated with third properties. Is it? Which should not consider. Is it right? They are not. We should not consider. See, here there is a risk. Is it right? Here there is a risk related to the material misstatement. Because of this only, we are hiring the expert. Is it right? Because of this only, we are hiring the expert. First thing, it has to be considered. Right? It has to be considered. The second one. Where WSD's company's experience with previous work performed by the expert. Is it right? Definitely, if you are hiring a new auditor, is it right? If you are having the new auditor, definitely we have to consider what is the previous. Why we are hiring the new auditor? We are hiring the new auditor only to make sure that we are hiring the new auditor only to make sure that we are not satisfied with the previous auditor. Is that we have to consider this. The question requirement is which we should not consider. Whether the expert is subject to quality control procedure. When you are hiring the expert, the expert should be special, should have experience in the related field. Okay. Is that we have to consider the experience in the related field. Now, means almost we are considering what we are considering the first. Is that by default, the existence of any interest. We don't come to a conclusion before going all the four options. Is it? That is the simplest rule. What people will do, the students will do that they will find that the second option is correct. They will go to the second option without reading the third and fourth option. We should not have that, is it? We have to be little bit careful. The existence of any interest in or relationship with thirds that might pose a threat to the object, expert, or this is related to ethics, is it right? This is not related to the IES 20, is it? This should means what you should not, this should not be considered. See, you are talking about the expert. Expert means, see, you say what are the, when we will hire an expert, is it? When we will hire an expert. We hire an expert when we think that there is a material misstatement is there. We hire an expert based on the when there is when expert is having experience. Is it right? Is it? When they have the experience. When we will have the expert, we will have the when we will hire the expert, when they say that the expert is having the complete knowledge about the procedures of a specific area. Yeah, in this area, this is as per IAS 620 as such. Okay, next, what the next one is it? I will take only one section at a time. Okay, thus audit junior has been assigned to the audit of the bank and cash balances of thirds company. He has noted down the evidence. Is it? He plans to obtain respect of the bank and cash balances. Is it? He has going to have the things with respect to banks and cash balances. Is it? What are the things which we have? Which one is more weighted? Okay? Which one is going to have the more worthy? Is it right? That is the things. Now, they have bank reconciliation carried by the cashier. Is it right? It is done by, it is internal. See, what is that? External confirmation is more valuable, more authentic compared to internal confirmation. Return confirmation is more authentic compared to oral confirmation. Is that these are the things which, see, these are the things. Now you when you are doing this tomorrow, in future when you are revising it, automatically you have to make sure of these points. Is it? Internal confirmation is weaker. External confirmation is stronger. Return confirmation is stronger. Oral confirmation is weaker. It is bank reconciliation. We have to see what is the order. Is it? Bank reconciliation carried by the cashier. Is it? Bank confirmation report from the, we are getting the external. Is it right? We are getting it the external. It is more weightage. Is it? Verbal communication. See the things. Oral confirmation. Oral confirmation from the directors. This is not only oral, but also it is internal. Okay, from the directors overall, regarding the overall limit to be increased. Cash count carried by the audit junior. Is it? This is the external. Is it? But what you are doing? We are making only a cash count. Is it right? We are going to be first the priority is going to be given for, the priority is going have to be given for whom? The priority has to be given to external. Is it right? The external. Then we have to give priority to internal. Okay. Internal weak confirmation. External strong. Now, what we are getting a external confirmation directly from the bank. Directly from the bank. If we are getting directly from the bank, this confirmation will have the highest priority. Got my point? Next, the second one, external. we are getting a cash count by the audit junior himself. He is only doing, is it right? It is external, but priority wise, it is second. You are doing second count, cash count is there, but it's fine. Next, we are talking about the what verbal conversation. Is that bank reconciliation carried by the cashier? Is it right? Bank reconciliation carried by the cashier. See, at the end of the month there will be reconciliation done by the firm as such. It is that the bank reconciliation statement. It is done and it is documented. It is done and it is documented. The next one is verbal communication, oral and internal. Is it right? This is the oral and internal. Oral communication is very weak. Okay, oral communication is very weak. This is the way we have to identify and put it in a hierarchy way. Okay. Now what happens? How it will work? Is it bank reconciliation carried by the cashier? Is it bank reconciliation is carried? Put the things you have to. Is it put the things? How it is going to be the bank reconciliation carried? What we have done? We have put the stages. Is it right? Bank confirmation report by the bank is the first one. Is it right? Bank confirmation report. Where is the bank confirmation report from? Third bank. We are getting it from that directly. Is it right? It comes to one. This is the first one. Next, what is the second one we have done? We have done in terms of what? Cash count carried by the auditor himself. Is it? Cash count carried by the auditor himself. It comes to one. It comes to the second one. Is it right? It comes to the second one. Next, what is the cash count carried out by the cashier? Is it right? Cash count carried out by the cashier. It comes to the third one. Is it? And we are talking about the verbal communication from the directors. Is it? It is the fourth. Is it? This is what we are doing. We are talking in terms of what? We are talking in terms of audit evidence. Yeah? We are talking about audit evidence. What we have done, we have covered what are the things in this section. We have covered in terms of related to cash and bank. Is it right? Related to in terms of assets, cash and bank. What we have covered, is it right? We have covered in respect to what? In terms of the expert advice. Is it right? In terms of experts advice. What are the conditions we have to consider? Is that we have to take into consideration in terms of the assertions? Is that how we have to have the evidence? Is that we have to take into consideration the evidence factor? And what we have covered in terms of what? In terms of the various assertions. All 6 assertions has been mentioned, and we are also talking about in terms of the revaluations aspect as such. Right? Now you go through it. These are the important concepts which you are going to work it. Hopefully you have understood this. If you haven't, is it right? Like it. I will say this the things. Is it like it, share it, and subscribe the channel. Even you subscribe the channel, the moment I will post new videos related to these things, you will have a complete picture. And watch till the end every other video. Okay. Thank you. See you again.